Okay, so we're going to do the 2009 question, which is Broadford GAA Club. Now this question involved doing an income and expenditure account and a balance sheet for a club. So the first thing we're going to do is the income and expenditure account, and as with all accounts, you title it first. The income and expenditure account of Broadford GAA Club for the year ended, which is in this question is the 30th of April 2009. Now there was no trading account here, so there's no shop profit or bar profit to put in here. So the first income for this club are the gate receipts, and those are 23,940. The next income for this club is the subscriptions. Now there's an adjustment on the subscriptions. You can see in the additional information given under the receipts and payments list, there's subscriptions prepaid. So subscriptions prepaid. So the subscriptions are 34,100, and as always we take away prepayments to get the net subscriptions figure of 32,500. Okay. Now, the next receipt I see is the club lotto. But there are also club lotto prizes down in payments, so I'm gonna net those two figures off up here. If you put the club lotto prizes down in expenditure, that's fine too, so long as you just don't enter it twice. So that was 53,700 minus the prizes of 19,400, giving a net total of 34,300. Adding up our three incomes to net income figures here together, we get a total of 90,740 for total income. Moving on then to expenditure. So there was maintenance expenses, and those are 3,780. There was stationery, but there's an adjustment on stationery, as there was stationery on hand. Stationery on hand means that there was basically stationery left over at the end of the year that is going to be carried over to next year. So maybe some pens and pencils and paper, ink cartridges that haven't been used this year, that will be used next year. Because they haven't been used this year, they don't belong in this year's expenses. So they'll carry over to next year. So it's like stationery prepaid in a sense. So we take it away. Sorry, it's called stationery on hand in the question. We take that away, and we get a net stationery figure for the year of 1,560. Those general expenses of 3,4,610. There's insurance 9,330. Moving on down. There's light and heat, but there's an adjustment on light and heat. So 2,260, but there's light and heat due. You still owe some money to the utilities company. 290, giving a total of 2,550. Now, there was no purchase or sale of fixed assets in this question, but if there was, I would exclude them. We do not include the purchase or sale of fixed assets, but what we do include is the depreciation on fixed assets. Now this, we were told that this club had two fixed assets to be depreciated, the clubhouse and the equipment. So depreciation on clubhouse at a rate of 3% of 364,000 was 10,920. and depreciation on equipment at 15% of 80,000, so it's losing value to the tune of 15% of 80,000 is 12,000. Then we total up our expenditure and we get 74,750. So it's clear that there's an excess of income over expenditure, and that's what you call it. You don't call it a profit or a surplus, you call it excessive income over expenditure. If expenditure was greater than income, it would be excessive expenditure over income. Net that off, and we get 15,990 as our excess of income over expenditure. Then the second part of that question asks us to do a balance sheet on that date. Now, as we know from last year, the balance sheet is a snapshot of a company's finances on a particular day. What they own and what they owe on a particular day, and how the club is actually financed as well in the second half of the balance sheet. Normally do it in 3 columns. This shows 4. I can just get rid of one of these columns here, and we can do it in 3 columns. So the balance sheet of Broadford GAA club on or as at a particular day. So this is the 30th 4th 2009. See, a balance sheet will change from day to day. So the fixed assets are always so cost, depreciation, and then in this column here we're going to put NBV, the net book value of the fixed assets. So we have 2 fixed assets here. We have the clubhouse, which cost 364,000. There was depreciation on it to the tune of 10,920, giving it a net book value of 353,008. There was equipment that had a cost of 80,000 and depreciation of 12,000, giving a net book value of 68,000. Now, it's very important when you're doing the balance sheet of a club or of a limited company that you add up the individual columns, as there is marks going for each of these figures here that I'm about to highlight in red. So each of these figures here should be added up together. Then we're going to move on to current assets. Items the club owns that changes value regularly. And there are 2 in this question. The stationery on hand, there's another way of saying it's stationery prepaid, is a current asset for the club. And the second current asset for the club is cash. And that's given as an adjustment. Now, other current assets that we saw when we did final accounts were debtors, bank balance, other expenses prepaid were all current assets, or gains due, so commission receivable due, rent receivable due. But here we only have 2, and the total for those is 8010. We mark them in red. Current liabilities then. So debts that must be paid by the club within 1 year. And the first debt they have, I'm just going to change it to black, is light and heat due. Not the light and heat figure, just the light and heat due figure, the amount that they still owe. And then the subscriptions prepaid also go in here. Now this is often a confusing one. How does a gain prepaid become a current liability? In a sense, what you're saying is 1,600 euros of the subscriptions paid do not belong in this financial year. They belong in the next financial year. The club owes them to the next financial year. So that's why they're a liability. And the total for those was 1890. I'm going to mark those in red. So working capital, the money available for the day-to-day running of the club. And the working capital is current assets minus current liabilities. In this sense, in this question, the working capital is going to be positive, as current assets are greater than current liabilities. Current liabilities are greater than current assets. The club would have a liquidity problem, a problem paying its short-term debts. That would be a very unhealthy position to be in. It's positive to the tune of 6120. 6120. And then we get the total net assets of the club by adding the total fixed assets figure of 421.80 plus the working capital figure together. Because it's a positive working capital, I added. If it was negative, I'd take it away. 427,200. The second part of the balance sheet is where you show how the club was financed. Now, this club had two sources of finance. The first is the accumulated fund. I've shown you in other videos how to calculate the accumulated fund of a club. In this question, you didn't have to calculate it. It was given to you right at the top of the question. And it was 411,210. The final figure that goes in here, we have already worked out up in our income and expenditure account. The difference between our income and expenditure, our excess, was 15,990. So we put it in here, 15,990. Adding those figures together, now I'm going to call them total capital employed. Not maybe technically correct, but it's fine to use that terminology in the question. So adding the accumulated fund, the excessive income over expenditure together, my balance sheet balances 427,200. My total net assets match the total amount of capital put into the club, or the total amount of invested within the club.